take a look at our Canadian dollar today. A little bit of pressure. We do have a nice surging American buck that we're comparing ourselves against. So while we do have some strength in crude prices, we are down 7 ticks, 75.48 right now. But we had a nice run at the beginning of the year. Just seem to be bouncing around that level. So we are holding our ground. But can it last amid all the ongoing U.S.-China trade tensions? Adam Button, Chief Currency Analyst at ForexLive, joins us now to weigh in. Good to see you, Adam.
Hi, Greg.
So what is the fate of the Canadian dollar given all the turmoil happening around us and the gyrations we've been seeing in the U.S. buck?
Right, I liken the Canadian dollar right now to the Canadian great boxer George Chuvalo. He fought Muhammad Ali 3 times, was beaten up, but never knocked down. The Canadian dollar has taken a lot of hits in the last year, from NAFTA to the Bank of Canada shifting more dovishly, but it's still hanging in there and it's coming forward right now. It's the best performer this year among the major currencies, but of course that comes after months of declines at the end of 2018. So right now, we're watching closely. Oil, Canadian dollar is very closely tied with oil, and it's that trade story. Canada needs that tailwind, and right now the market is very optimistic.
Now, it seems that when we talk about currencies right now, a lot of the central banks around the world are starting to sing the same tune, obviously led by the Fed when they suddenly took that dovish turn last year. And so it's interesting when you watch the different currency moves as to the world sort of waking up to the idea that maybe we're near the end or at the end of the rate hiking cycles.
It's really been dominoes, and even if you go outside of Canada, you look to Australia and New Zealand, in the last couple of weeks they've shifted and said, you know what, we're neutral or we're thinking about cutting. And that's kind of the next round is, okay, you shift to neutral and then you start talking about cutting rates. And if Canada were to hit some hiccups in housing, if oil were to take another spill, or if trade were to fall, you can envision a scenario where the Bank of Canada is one of the first to cut. Certainly, Paul Laws doesn't have any kind of aversion to changing his mind quickly. So you could see easily a scenario in the second half of the year where the Bank of Canada is cutting and the Canadian dollar is taking another fall harder.
Now, when I come in every morning, the first question I ask and getting ready to go on TV is, are we optimistic about trade between the United States and China today, or are we pessimistic? Because it can flip back and forth from day to day. It's got to be tough in the currency trade to deal with that.
It's really all correlations have gone to 1 in the start of this year so far, or even at the end of last year. There was a lot of pessimism. Now there's a lot of optimism, and everybody is thinking, well, Trump wants a deal, Chinese President Xi wants a deal, so let's get a deal done. At the same time, deals are always hardest to close at the end, as we saw in the NAFTA deal, and I think we're more likely to hit a speed bump. Markets are up 15% almost at the start of the year, and I think just a little bit too much optimism is baked in, and the next headlines are likely to be negative, dragging down markets and the Canadian dollar with it.
Now, when it comes to Brexit, obviously that has profound effects on the British pound. We get a lot of maybe sound and fury signifying nothing, at least up to this point.
There's an incredible amount of noise, right? And if you look at it, okay, it's almost impossible to sort out all the noise because there's so much political turmoil and so much political jostling. But the underlying message is that no one wants a no-deal Brexit. Pretty much everyone in Parliament wants trade to continue with the EU as it is, and I don't think they're going to stand for anything less than that. So ultimately, it works out whether it's with Jeremy Corbyn as Prime Minister or Theresa May or someone else in a deal where trade is similar to what it was before. Now, how we get there is probably going to be very messy, but I think there's a path here where Theresa May says to her hard Brexit counterparts, okay, this is the best deal we're going to get. This might be your only chance to get out of the EU, so either you take it now or we blow the whole thing up. And, it could get a lot worse for the pound in the short term, but I think in the long term there is a lot of upside that's going to come, but the timing of it is terribly difficult to determine.
Now, apart from those big stories that have our attention, are you noticing anything interesting flying under the radar in the currency trade?
Yeah, I think there's a lot of worry out there about the economy that's dissipating. We're starting to pick the winners and losers. At the end of the year, it was the market saying, you know what, the whole global economy is slowing down. And now we're saying, okay, China is something to worry about. But we look at Canada, we look at the U.S., there have been some very strong numbers. Canadian employment over the last 5 months has been the best period in 16 years. Now, that's probably overstating some of the strength, But the Canadian dollar has been strong this year. The U.S. has proved to be a good place to invest. Again, the FX market is all about those differentials and who is just doing a little bit better. And I think there is some room for optimism there in some of the winners, like the Canadian dollar.
Adam, always great to get your insight. Look forward to the next time.
Thanks, Greg.
That's Adam Button. He's the Chief Currency Analyst at ForexLive.